In coming videos, I'm going to show you how I'm estimating the peak of the next bull run. This is not the peak, but I just wanted to explain something about percentages. What if Bitcoin's price fell down to 29,000 and you had a target price of 240,000, but instead you bought around that 52,000? What difference would that make in terms of percentages? If you bought around 52,500 and you sold at 240, it would be a 357% return. But if you managed to buy at 29,000 and sold at exactly the same price, you would get literally 727% return. I personally know which one I would be after. I'd like the larger one rather than the smaller one, but they're quite healthy either one. This is what is called getting onto the right side of the percentage. As you buy and stack your bags, don't seek to buy at the bottom, just seek to participate in negative price momentum. Bitcoin is a scarce resource and it's really undergoing massive adoption globally. If we get a bit of a pull down in price, and that could be on the boards, you should be prepared for that. But if that occurs, look at what you can do if you trade or hodl part of your portfolio all the way to the top. Over the next couple of videos, I'm going to be telling you what my top is for this next bull run and why. It is not 240,000, but it's not far from it. The more important thing is to understand the consequences of price action, and I'll be taking you through that, so make sure that you subscribe. Please don't miss it. Now it's time to go through Bitcoin's price action and see what is cooking in crypto. Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back CTKS family. Let's have a look at the Bitcoin levels. Bitcoin is currently 51,310. To understand where structure is, let's pop on the indicator from the service. These are very special lines called SLs or Stanfield levels. They're drawn across all of price action. And they're done so in accordance with standards, Level 1 and Level 2 standard certification. These are not random lines. We've seen some really interesting behavior around this 50,900 mark. Bitcoin managed to get through all of this structural resistance and it couldn't get up to the next level around 53,300. So it came back, tried to get up, but was weaker. You'll notice this weakness here. Then retested, came up, no go. Retested, came up, no go. Retested, cracked the concrete, came back up, and we currently see Bitcoin is selling down. As I mentioned in the last video, the fact that Bitcoin is continuing to hit this level of structural support isn't actually a great thing. In an ideal circumstance, we would just be going up and up and up, just retracing as we go, but that's not happening. One thing to bear in mind, when price comes down, you're getting on the right side of the percentage. A lot of people just simply get manipulated by institutions. When the price comes down, what do the institutions want you to do? They want you to run. When the price comes up, what do they want you to do? That is, what do the institutions want you to do? They want you to buy. You may have heard the rule. Rule number 1 in financial markets, don't lose money. Rule number 2, see rule number 1. They've already got you conned all the way through. I'm going to reveal in the next couple of videos why buying on the way down is without the question, any question at all, the best thing that you could ever do. But it will feel pretty weird, like going and running a stoplight. After all, we are told that red means no, don't go, don't drive, stop, and green means you can go. It's exactly the opposite inside financial markets. This takes many, many years to learn, but it's really important to learn it because if you don't, you're going to find that you get the death of 1,000 cuts. And if you're consistently buying at the top and selling at the bottom, you know what I'm talking about, and we all go through that process. If you haven't subscribed to the community, please subscribe because I'm going to be bringing out some really fantastic videos in the coming week. And let's have a look at what could happen to Bitcoin under a negative scenario. We would be looking at a bit of an action like this. Just be aware that we've got a negative fresh air gap between 50,500 down to 46,500. That means that the price could come down very, very quickly and shock a lot of people. But not you. You will be prepared because you know from all of the price history that this structural air gap exists. Don't automatically assume that we're going down. The crypto market is very forgiving and it's very optimistic. We've got the most optimistic people on the planet. It could also go up. This is part of your three-dimensional risk management. If it comes up, it will seek to challenge the 53,400 level. So also be prepared and have a strategy for price coming up, price just going nowhere like it's been doing for quite some time, and then finally deciding if it's going to go up or if it's going to go down. And don't automatically assume it's going to go down. Just be prepared for if it occurs. I'd like to help you position yourself effectively inside the crypto market. What have we noticed recently when it comes to total assets under management of all the Bitcoin exchange traded funds? There's those ETFs. We've been seeing a lot of flatlining behavior. This is not necessarily bad. There's a bit of a run up with the ETFs. Now things have cooled down a little bit. The sales forces inside these organizations haven't really even geared up yet. There is a potential for a spot ETF on Ethereum. What did we notice recently? A big spike in Ethereum as the institutional funds came in. At the current time, they're going out. Bitcoin is called digital gold, so I thought it'd be really interesting to discuss the total assets under management of gold. And what are we noticing here with good old physical gold? Those AUMs are coming down. Also, looking at silver under assets under management can be a really good idea. What have we seen recently? Well, we've seen the assets under management of silver over the past month also come down. Could Bitcoin be absorbing assets under management from different asset classes, the traditional gold and silver? Please let me know your thoughts in the comments. Inside the crypto market, there's not been a lot cooking. In terms of 24-hour liquidations, there's been 82.71 million, and we can see the longs have been less liquidated than the shorts. When the shorts get liquidated, they drive the price up. When the longs get liquidated, they drive the price down. We can see the shorts were getting liquidated on Bitcoin and Ethereum over the past 24 hours. But as we go down, what are we seeing? That's starting to turn around. This explains the drop-off in price with Bitcoin. Currently, there's $23.45 billion of total Bitcoin futures open interest. Typically, futures open interest can be a very powerful driver of price. You could see after that peak in the last bull run, we had a lot of futures open interest come out of the market because people were just too bullish and got absolutely severely hammered as a result. Then we got inside the crypto market, all the bad actors got flushed out. We went a little bit sideways and now we're starting to come back up. In truth, the bull run hasn't even commenced yet. And please make sure you subscribe because the coming videos will be very revealing. You notice that things have gone a little bit flat when it comes to Bitcoin. You can see this futures open interest is really, really high. It was this high going back to these twin peaks that occurred in the last bull run. It's really hard to keep that level of funds flowing into the markets. And when you look at open interest, you can see that it gets a up and down kind of action. When it comes down like this typically draws in the shorts, unless there's some other structural reason. What happened here? China decided to boot out all the miners. That's what caused this blow down in Bitcoin's price. Fortunately, they came back online throughout other countries. And that's what caused this second peak. But the key is, Around this particular area is a very high level of open interest, and we're seeing it right now. The markets may need to normalize a bit, and if they do, please do not be freaked out. What you're going to see in episodes that are coming up, if you can buy, if you can hold the line and buy as price is coming down, you're not only a rock star, you're a mathematician, because you're getting on the right side of the percentage, and that's all you need to do. It's important to understand the Bitcoin bull run and the crypto bull run hasn't even started yet. We're not even at the halving. One thing to always bear in mind, when the prices go red, they go red because the institutions sell down. Why do they sell down? Because they want other people to sell into their demand. Why do they want to do that? Because they want to push the price down so they can then push it up. If you're running away on the red, please don't run in on the green. You'll just get the death of 1,000 cuts. What unfortunately also happens is a lot of people are so impatient. If the markets just go caution, just think about that stoplight, red light, green light. The concept is when the markets go for a caution, everybody gets bored and they say, oh, come on, do something. As a trader or an investor, you must not run away when the markets go red, and you must not run into the markets when they go green. Instead, you need to understand structure. If you understand the structure that underpins price movements, you'll understand why things happen and where price can go. Have a great one, family. Catch you in the next one.